There's a lot of businesses that we come across that are doing $1 million a year in revenue and they're cash flow negative. Like they might be profitable, but because of high interest loans, short-term loans, factoring, all of that money is going to debt servicing. There's a bunch of different examples, but people will say, hey, I want to scale, I want to grow. But it's like, hey, if the math doesn't math on the business model itself, if we scale you from $1 million to 5 million or 5 million to 10 million, you're just amplifying your problems. So a lot of times too, when we get a new client, we just really making sure that the maths for these clients before we actually help them scale up. What is up? My name is Dylan. I'm one of the co-founders here at STAXX. And today we're chatting with Eric, who is one of our fractional CFOs on the team here at STAXX. Make sure you watch this video all the way through because at about 23 minutes in, Eric's going to show you real examples of how he's helped clients here at STAXX through the different modelings and the different things that he's able to do to help a business perform better and hit the growth that they're looking for. Eric, why don't you just give a brief overview of your professional background as well as some of your personal background if you'd like.
Sure, yeah. Thanks for having me. So name's Eric. My background is in FP&A, financial planning and analysis. I worked in corporate finance for multiple manufacturing companies, logistic companies for about 5 to 6 years and recently joined on STAXX at the beginning of this year. So a lot of my time was kind of spent building budgets and forecasts and really mapping out strategies for small businesses. So spent a lot of time doing that. On a personal side, I was born and raised in California. I'm currently located in Roseville, which is a little bit close to Sacramento, for those who are familiar. I'm a husband and father of one, so pretty simple guy on the personal side. I like to spend time with my family, my toddler, like some home cooking once in a while, and everything in between, just kind of filling up time with having a little baby recently. So happy to be here and excited to chop things up.
Awesome. I love it. Yeah. And in this video, we're going to talk a little bit about what Eric does here at STAXX, how STAXX is a little bit different, his experience working here. And then also towards the end, we'll jump into some of the actual things that Eric has built for real clients, different types of models and forecasts and things like that. So that'll be awesome to take a peek at here later in the video. But now, why don't you just touch on a little bit your role here at STAXX? Obviously, you're a fractional CFO, but what does that actually mean? What are you actually doing on a day-to-day? And then, what is a fractional CFO to you?
Great questions. So a couple things. I'll start with kind of, I guess, my role here with STAXX. So I'm one of the fractional CFOs here. And I think at the core of kind of what our role is, it's really to understand and learn our clients' businesses kind of inside and out, right? Because ultimately, if we don't do that, then we really can't ever build a strategy for them to reach their goals. And if we do accomplish that, then it opens so many doors for us to understand how to actually help these people, how to make these clients reach, whatever they're trying to strive for. So I think that's kind of the core of what we try to do. How that kind of manifests is on a day-to-day basis, I think kind of threefold, where the first is we're really kind of trying to be the interface between our team and the clients themselves, whether that's throughout the month, talking through them, if they have any questions during the monthly calls that we have, where we're going through the actual reports, talking about how the actual month did before, and really just kind of being that financial partner and guide so that we can have, all our clients have point of contacts with our team, but just kind of making that comfortable to be able to talk and interface with us. So that's kind of the client-facing side of things. I also, on a day-to-day basis, really help translate our business's ideas and goals into metrics and KPIs so that we can actually track things and actually grow things and actually kind of measure things for people. And then the last part of it is kind of more the hands-on financial modeling, building budgets, forecasts, to kind of use our clients' data, which they have a ton of, and translate that into kind of models that they can use on a day-to-day basis. So that kind of in a nutshell is the role, and a little bit of glue in between kind of everything else that happens in STAXX is a lot of what we do. But that's kind of in a nutshell the role. And if I could touch on kind of, what is the fractional CFO piece of it? It's a question that I actually get a lot and pretty often. And to me, it's really a part-time or an outsourced acting CFO for a small business without actually being a part of their full-time staff, right? So a lot of these businesses that do have full-time CFOs, we most of us kind of know what a traditional CFO does. They have teams and teams of people that require a lot of kind of effort, cost, and resources to build out. But there's a big segment of the market where these small businesses are large enough to have kind of problems and have questions that are related to higher level financial analysis, but they're not big enough to have full-on staffs or someone even full-time with them, right? And so that's where a fractional CFO, who really does a lot of what a traditional CFO does, but just in pieces for the business, kind of gets plugged into a business and really becomes kind of that guide or kind of support for whatever they need to help them grow their business. So that's kind of how I see the role.
Yeah, and maybe touch on what a full-time, like corporate Fortune 500 CFO salary would be.
Yeah, I mean,
I know it ranges, but just to give
yeah,
people an
quite a
idea
range.
of
But I
what.
mean, even if you're looking at someone that is kind of entry level and just doing bare minimum of just looking at cash flow, P&L, right, for even a smaller company, you're looking at least 200K to 50K for starting. And if you're talking
Mhm.
about full time or even having teams of management people over, it can, obviously go much more higher than that. I'm sure you can find a little bit, it's all things are arranged, right? So you can find someone that's a little bit less, but at the same time, you kind of get what you pay for certain things. So when you need someone that's kind of in that position to be overarching for all things finance within the business, there's a lot that goes into that. So it's one of the benefits or pros and cons of the fractional side is, yes, it is fractional in capacity and operations, but it's also a fraction of the cost as well, right? So that's why it's really appealing to kind of small businesses in this particular segment of the market, that can kind of have the benefits, but not also have to pay out that full cost.
Yep, exactly. And because like you said, they still have problems, right? When you're doing, 2 million a
Right.
year in revenue, 5 million a year in revenue, 10, 15 million a year in revenue, taking on a $200,000-300,000 salary, and on top of that, building out an accounting department that you have to manage, can definitely be daunting for some people, but they still have problems that need to be solved, right? And that's where we've been able to kind of create this fractional accounting finance team model, where we're able to plug in not just a CFO like yourself, but also some accounting people as well, to really facilitate the entire process. Because if you're doing 5 million a year, 10 million a year, odds are you don't want to manage and train and hire an entire accounting department. So yeah, that's awesome. You do great stuff. And in your experience, well, I have two other questions. Like, when do you think it makes sense for somebody to explore having a fractional CFO?
Mm.
Because oftentimes we do have clients that even are doing a couple million a year, and they're like, yeah, I'm not sure if I'm big enough, or I'm not sure what kind of value could be brought in. So when do you think it can start to make sense for someone to explore, a model like ours and having a fractional CFO? And how do you see the fractional CFO services helping the clients that you're working with day to day?
Yeah. Personally, I mean, from the businesses that I've seen while being in STAXX, I think the sweet spot is right around when you hit right around that $1 million to plus revenue per year mark. And that it's for a couple of reasons. I think that's right when the finances are kind of officially overwhelming to take care of on your own as a business owner. And also you kind of leave yourself exposed to compliance risk when you try to do it all by yourself if you're not a professional. And so the threshold around where that activity kind of happens, I've seen right around that point. And then also the a lot of how we help our businesses and the people that do work with us is to kind of forecast out where a business is going to go. And right around that million mark is where I've seen business either kind of crumble in a sense or be able to take that next step up in terms of formality, because they are a lot more formal accounting, have a lot more formal processes in place. So I think right around that mark is right around where I would strongly consider reaching out for help in terms of looking for someone that can do that. Because really, one common kind of issue that I think a lot of these businesses in that size deal with is everyone wants to grow, right? But not everyone really knows what are the specific areas to focus on to grow. And so a
Yeah.
lot of these businesses, when they get to this size, their operation focus, and so their day to day is really just, how do we keep our doors open? How do I, fulfill the customers? And you don't really have time at the end of every single month and the end of every week to look at your cash numbers, to look at your forecast numbers, to look at the revenue numbers. Where do we go right? Where do we go wrong? And how can we remedy all that, right? Having someone on your team that looks through all of that and presents it to you on a monthly basis is a huge asset in terms of having just someone fully focused on the finance side of things, right? So it's almost like you can take off this huge burden as a business owner and really focus on what you do best. And probably what you got into business for is really to do the work in the business, not so much be an accountant, be an in-house budgeter, be an in-house CFO, all that kind of stuff. So
Mhm.
I think that clarity for business owners is something that is really, really appreciated and something that we always strive for. So
Yeah, and with the monthly meetings too, I always say that, of course we offer accounting, CFO, tax type services, but really the business beneath the business is really the accountability. Because there's a lot, like, we're well aware that this is one of the most stressful parts of business ownership and entrepreneurship for these founders, is the accounting and finance function. So there is a lot of people that will just play, they'll just be completely ignorant to it. They just won't look at it. They won't do
right.
anything with it. They won't look at the numbers. To where if you have a hard set monthly meeting with your fractional CFO, there is a force function for you to sit down and spend the 30 to 60 minutes going through the financials and saying, okay, there's a couple of red X's here. What's the behavior change that needs to happen for us to get these to green check marks? Because how we like to think about it is, hey, if we just ruthlessly track these 5 to 8 metrics that are ultra specific and important to your business, if we get green check marks across the boards on the targets we set there, you're going to end up with the outcome you're looking for. Just because we can track something doesn't mean we should. We don't send, 100-page reports tracking 100 million different things, because that's not beneficial to the business owner either, right?
100%. Yeah. And I think one of the most exciting parts is, like, as we work with our clients, we sometimes see the KPIs that we track evolve. So what I mean by that is, like, the stage and the kind of situation that a business comes to us in, and the numbers that we track usually deal with kind of unprofitability issues within the business. And so we focus on there. But once we have hit those metrics and those KPIs are measured and they start to kind of make best progress, then the business's attention and focus shifts to elsewhere as well, right? And so there's different KPIs to measure that as well. So each phase and each kind of season of a business, there's something that you can measure to actually tell you or indicate, like, hey, are we doing a good job? What can we improve on? What can we do better on? And building those out is, like, really exciting part for them, because you kind of see it in the business owner's eyes when you kind of have those right ones.
Yeah.
It's like a light is kind of dings. And then at the beginning of every month, they look forward to seeing what was my number, what was that KPI, and how did I do, right? So that continuity, I think, is a big piece of it. And you hit it exactly on the head. Like, the accountability piece, I think, goes unsaid a lot, because at the end of every call of our monthly meeting, we like to at least walk away with 3 action items that we know we can follow up on that's going to actually move the needle.
Yeah.
Now, those 3 action items don't usually, they don't always get completed every single month, but at the very least, we like to at least give that clarity and direction for business owners so that they can kind of, once they review their financials, it's not just like, okay, I know what the numbers said, right? We want to know, what does that mean? And what does that actually mean for the business? So,
and what now?
And what do we do now about it, right? The next steps about what we go to and where we go is always fun to kind of chop up with business owners.
Yeah, 100%. And you mentioned it earlier, where it's like, businesses know they want to grow, but there's so many different things they could do. What is the actual thing that moves the needle? What are the biggest levers that we can pull that result in them getting closer to their goal and making more money? Oftentimes those are the same thing. And that's really what strategy is. It's, okay, we have unlimited options, but limited resources. So When you sit down with a CFO, our CFOs are able to say, hey, based on what you're trying to accomplish and based on the financial standing, these are the couple of levers we could pull and that we suggest you go and pull,
Exactly.
100%. And alongside with hey, every business wants to grow. And what we see a lot, and, you could speak to this too, Eric, is, you can brute force pretty much any business to $1 million a year, really. Like, you could take almost any business model, put your head down and get to $1 million a year in revenue. But the problem is then people are like, okay, how do we get to 5? How do we get to 10 million? But at a 1 million mark, there's a lot of businesses that we come across that are doing $1 million a year in revenue, and they're cash flow negative. Like, they might be profitable, but because of, high interest loans, short-term loans, factoring, whatever else that might be, it just eats up so much of the profitability, where they might be profitable, but all of that money is going to debt servicing or just paying the owner. There's a bunch of different examples, but people will say, hey, I want to scale, I want to grow. But it's like, hey, if the math doesn't math on the business model itself, if we scale you from $1 million to 5 million or 5 million to 10 million, you're just amplifying your problems. Exactly. Right? You're just increasing the dysfunction. So a lot of times too, when we get a new client, we settle them down and say, hey, like, there's some material things here. Like, the math doesn't math, right? Like, we got to either increase pricing, we got to reduce the cost of services, we got to consolidate some debt so that it's not eating up so much of our cash flow, different things like that. Just really making sure that the maths for these clients before we actually help them scale up. Because in our opinion, I'm sure Eric feels the same way, but business is just a math equation at the end of the day. And what we're helping clients do is make sure that math equation plays in their favor.
Right. Exactly. Yeah. And actually that profitability piece is one of a super common problem that we see for new clients is they have that $1 million revenue mark, but in some cases they are profitable and don't have cash, but in other cases they're not even profitable, right? So that's why they also come to us and they're like, we know that we're generating sales, but at the end of the year, at the end of the month, we just don't have any of that money left over. Where is that money going? And where are we losing that money? Mm-hmm. Very simple, very common question. But until, like you said, fix the math, make the math, it's you're hurting yourself even further trying to grow, because you're going to have more problems than you are going to have solutions, right? There's like a comment or a phrase that I heard. If your customers double tomorrow, would you have twice as much revenue or would you have twice as much problems, right? Like, oftentimes in business that we see, it's 100% they would have twice as many problems, right? So until we fix that structure and that infrastructure, it's, we kind of also have to play the little bit of devil's advocate, because everyone wants sales, everyone wants to put more into advertising, but unless you have it and you do it right, you're just kind of walking into a circle of death, So that's a big piece of what we see for sure.
100%. No, we could have like an hour-long conversation on just this specifically if we wanted. I mean, people all the time are like, man, on my tax return it says I profited, 150,000, but that money's not in my bank account. Where's the money? It's like, well, by the time you pay all of the debt and you pay the credit cards off and XYZ, but you still profited technically, right?
Yeah.
But yeah, we could talk about this for a long time. So I know that you've spent time, in corporate America doing some FP&A. I know that you have experience working in startup accounting firms as well. I'd just be curious your thoughts on the culture here at STAXX. What your working experience has been here at STAXX, and how you think maybe we're a little bit different than maybe the typical accounting firm on the corner.
Yeah. Great question. The first thing that jumps out is we're a remote firm. Complete remote firm, right? So there's a lot of kind of things that we've had to accommodate for, build, and the way that you and Alex had actually built this out in a team, everyone is in different locations. So there's kind of that extra attention and focus to make sure that we are kind of connected and cohesive together. And actually, funny enough, I think one thing that sticks out from STAXX is how we communicate both internally and externally with clients. And we do that with a Slack channel. So I don't know if people aren't familiar with Slack, it's a direct messaging system, and we maximize it here at STAXX. Like,
for sure,
we have a separate channel for every single account that we do have, and both internally and externally, we have clients there and a whole team there. And I think specifically what makes it different is we really do plug in an entire finance team for every single client that we have. And the benefit of that is you get 10 minds plus versus having one other additional person on your team that's focusing on the finance side of things. So the clients kind of benefit of just being able to get value from so many different angles, from so many different people, so many different perspectives, because everyone on the staff here too, that's the other thing, is everyone comes from, a wide range of different backgrounds, different experience levels. That all gets funneled and kind of dumped into that Slack channel. So I think that access is something that really makes STAXX stand out from others that I've seen in the past. It's almost like a force multiplier, right? You get one team, but that team can generate so many different levels of value for you, whether it's accounting, forecasting, the monthly calls, even simple questions of like, hey, how do I book this? Is this a smart loan to take on? All that kind of stuff. It's all there. So that's the first thing. And then also in the time that I've been here, another thing that stands out is I think we have a pretty strong culture of continuous improvement, meaning like in the time that I've been here, I've seen legitimate actionable recommendations of how to improve a process, how to help something for a client, how to make something easier from a team member on our team at every single level of our organization. So owner, CFO, senior staff, everyone in between has in one way or another given a specific example of how we can improve a process. And those recommendations are always heard and most of the time acted on, right? Because that's the most important thing. It doesn't matter if you raise your hand if nothing ever happens or changes. I've seen so many things in here that actually improve and change. So I think that's a big piece of just kind of that smaller startup kind of vibe that you can't really have as much from the corporate side of things. We have that flexibility to do so, and we for sure lean into it.
100%. No, I think a lot of things have even changed for the better since you first joined. For sure, those handful of months ago, we've improved a lot of things, and that's kind of been our big theme this year is just further streamlining things, further standardizing things across the board. Yeah, it's been a lot of fun. In terms of maybe your favorite part about working here, is there anything specific that comes to mind?
Favorite part, like I said, because we're a remote firm, there's a lot of kind of communication and handoffs that need to happen in between. And when I first came on, I thought there would be a little bit of friction between, how we get the data, when the data is prepared, all that kind of stuff. But honestly, my favorite part has just been kind of communicating with the team in that Slack channel that I mentioned, because people are so responsive and we're able to kind of compartmentalize the work that we do. It makes it super streamlined for us to work together without ever having to work together. If that makes, we all kind of work asynchronously, but because we have good documentation, good communication, and really like everyone knows what the goal is for each client. When we focus on that every single week when we kind of touch base, it feels like we're working right next to each other without working next to each other. So I think that's been kind of my favorite part so far.
Yeah, and that's one of the big value propositions too. Is sometimes we'll chat with people and we'll get through pricing, and sometimes they'll be like, "Man, like I feel like I could spend just a little bit more and hire somebody in house," and that's where it's like, yeah, you could, but to hire someone that even as just a bachelor's degree in accounting, entry level, doesn't have a CPA, doesn't have a master's degree. I mean, you're at least $5K a month, like at least,
Easily.
and probably even more, 6,
Harder,
7, 8,
yeah.
especially if they have any experience or any licensure. And the problem with that is they only are going to able to take off part of what needs to actually be done. Maybe they just do the bookkeeping and the accounts receivable, but they likely don't have the experience to do any of the forward-looking advisory and forecasting. They also probably don't have the ability to help you with the tax planning and filing the returns and all the different stuff. So that's kind of where we're able to plug in multiple team members, like you were mentioning, that all have different experiences and expertise for a price that is often, either the same or even less than what it would cost to hire an in-house person. I mean, that's where one of the big unlocks is for people.
For sure. That's probably one of more of the underrated aspects and kind of soft benefits that can't be quantified is literally that. And I think you literally get a plug and play finance team into your business without having the cost of adding 10 more people to your staff. Like the monetary value of that is, I don't even think we can quantify, because for different businesses, they need different levels of help, different types of help, and having all those minds in that one channel to be able to kind of be answering your questions is something I haven't seen before in any of the places that I've worked.
Well, and then it's also the time savings and the stress savings of not having to hire, train, or manage any of these people either, because we're handling all that on our end. They're all our in-house team members that are plugged into our systems and processes and everything else. So
exactly.
No, that's great. Well, we're about 20 minutes in. I would love to spend a good chunk of the rest of the time showing real examples of how Eric has helped real clients here at STAXX through some of the modeling and some of the stuff, because sometimes it is tough. We'll get on calls and clients are like, man, like, what does the CFO actually do? Like, how do they actually help? And it's hard to quantify sometimes because it's so different for each client, right? Like one monthly call might be completely around how do we consolidate and restructure our debt. One might be completely centered around how do we increase our profit margin or our gross margin. One might be centered around, hey, I need to hire this person. How freaking much can I spend on it? And how does it affect my financials? So there's just so many different situations. But yeah, I wanted to give Eric the time to talk through a couple of different examples. So Eric, feel free to share your screen and wheel and deal.
Absolutely. Sure. So I'll share here. All right. So we did have a little bit of technical difficulties while recording that original video. So we do apologize about that. But as promised earlier, we want to still walk through a couple of examples of how we're helping our clients on a day-to-day basis today, and walk through 4 models that kind of go progressively more and more in depth and more in detail with the businesses that we're working with, to just illustrate the kind of capabilities and the type of support that you can get on fractional CFO side of things for us. So this particular example of what you're seeing on the screen here, in this case, the business owner came to us and they had lost their head of sales. And they really needed to replace that individual as soon as possible to not miss a beat in their month-to-month revenue. Now, the question that arose was, based off of the 2 factors that were in consideration between the projected gross income of the business and the close rate, we wanted to get to a commission payout percentage that made sense for the business's cash structure, that made sense for the business's overall cash position. The biggest question that the individual had, the business owner had, was, based off of these variables, what is the maximum amount of exposure that I would be putting myself in front of in terms of commissions? And on the flip side of that, what's the minimum amount, right? And so what we did was we created a pretty simple sensitivity table here that you see that just shows you all these micro different scenarios and the total outcome of what that could happen. And so what I mean by that is, in this case, on the top right here, we're seeing the different amounts of projected gross income that we expect for the business. The baseline, which is probably the most realistic scenario, is about 2.25 million. Based off of that, we also see the different types of close rates that individual can have, whether it's below 10% or on a high case above 25%. Each one of those close rates corresponds to a different commission rate. And based off of those different commission rates, we can see and calculate what the overall commission will be. In our baseline scenario, for example, 2.25 million and a 15% close rate would get us to $45,000 of commissions for this individual for the whole year. Now, on the flip side of that, the maximum exposure, let's say the business did very, very well because the individual had a close rate of 25% or higher. That awarded them 3%. And actually, because of having that higher close rate, the business made 30% more revenue. In that scenario, we can see that the maximum exposure would be $87,750 of commissions. So you can kind of see how the individual can play around and look at different outcomes based off of what we think the business and the individual and how they will perform. So you can have clarity there. Now, to bridge the final kind of overall question, we also wanted to leave a toggle to, let's say, if the base salary was not 150,000, we wanted to see it at 200,000. Then we enter that toggle here. This table below marries the two between the base salary and the different types of commissions that they can earn to give full visibility of what the total compensation for that individual will be. So this was a really cool tool in the sense of giving the business owner a lot of comfort and peace of mind that, hey, based off of these conditions, based off of these variables, this is what your type of pay that you're looking at. And this, how does that fit into, like I said, your cash position, your goals in the future, coming months, years, and things like that. So it's a really nice way to visualize and not have to guess or just go with your gut feeling of like, okay, I think this is okay. Really putting numbers into answering these questions was a really cool way to help the business owner, in this case, make a decision with full confidence, right? Because you have the numbers outlined in front of you. Anything that falls within here, it's okay because we know that this is what the range of outcomes can be, and you just make these decisions with partners that can provide you that type of data support. So this was a really cool one and one example of how we help on an ad hoc kind of one-off basis. Another example of how we can help is a little bit more hands-on in the sense that when a business comes to us and profitability is the major concern, right? This happens very often. The first step that we always try to turn to is let's look at the historicals and see where there were holes, where cash and income and revenue was bleeding out. And let's create a budget and put it in place so that you don't have to go through this dance of making sales, but looking at your bank and there's nothing ever left over at the end of the month, or worse, at the end of the year. So having some structure in place in terms of budget really helps these business owners to understand, hey, this is where I can spend more on, this is where I need to pull back on in order to hit my net profit goal at the end of the year. We cover this every single month during our CFO calls. We make sure that you stay right on task, but it really oftentimes begins with kind of getting our hands dirty and walking through with the business owner each individual line item on the income statement to really map out what we think that this is going to be for the future year, right? So it's a little bit more dry of a process where we take the whole income statement and we go by each item. We build things either bottom up where they needs to be, hey, we need a little more granularity and not just be able to pick a number and just try to target there. Oftentimes that's the case for payroll, where we have a full roster, full pay, and we kind of build it up that way so you can play around with different scenarios there. But for other ones, we can rely on percentages from previous years, previous actuals, or if there's other plans for future years, that's when we discuss and say, okay, this is the expected amount of budget. And we do that for every single line item here within the income statement, ultimately to be able to get to a bottom number here that is the net income, right? And so this is what we anchor to. And after the whole process of back and forth of do we think this is too much? Do we think this is too little? Where can we squeeze out more percentage points of profitability? This number is ultimately where we land on, right? So a lot of this process is very hands-on. It's very collaborative because we can only know so much in terms of the day-to-day operations until the business owner kind of fills us in on that. So it's a very collaborative process that helps us understand a lot more. And once we have this, like I said, it's very granular in terms of being able to track where we overspent and underspent, ultimately to have protection against this net income number, which was the main goal for this business, right? They came to us with over 2 million in profit and they did not take home, 2 million in revenue and they did not take home anything. So that was a major, major red flag, and taking steps towards the right direction was really the first step. And this is how we did that for this individual. So a third example of how we can help is even more in detail, specifically around problems like pricing. A lot of businesses come to us and they're in a stage of rapid growth. And because they're growing so quickly, there's not as much time from the business owners to really sit down, analyze, and break down their pricing to understand what's our margins, not only as a company, as a business, but the individual products that we're selling, right? So oftentimes there's different levels of service, different types of service, and the business owners don't really have clear visibility to what's their best product, what is their best service, what should we pull back on, and what should we push more into and lean into. So that was the kind of purpose of this exercise, in that this company really had exploded over the last 12 months, and they really wanted to revisit their pricing. They had a couple different packages in terms of categories. So they have these types here, and within each of these, they're pretty granular in terms of what makes up each individual package. So this process was like the previous one as well. Like I said, going more and more in depth, sitting down with the business owner, looking at every single package that they have to offer and really mapping out what is the expense from here, what is the expense for here, how many people do we expect to see purchase this. And that kind of culminated into a big table like this. And as you can see, there's about over 400 individual line items of of pricing, of data that we need to parse through. And ultimately what that looks like is flipping over into kind of a pretty complex table that shows a lot of toggles, a lot of different ways that they can play around with how they want to manage their pricing, how they want to include, if they want to include certain services, take out certain services from different packages. All that flexibility was baked into that model here, which rolls up into a summary sheet here, right? So what this allows the business owners to do is to really come in here, change different toggles, whether in this case, whether they came as an individual or came with a spouse made a big difference. Turning this off for a scenario where there's only one person with one child, or if it's just a solo person. As you can see, anytime you update these, everything else here automatically updates, so that's how you know, okay, this is our total base cost for it, what's our price that we're charging, what is the gross profit for that product, and what's the gross profit margin, right? So the real key here and the real big takeaway from this was their ability to understand what lines of products were profitable, like I said. So one thing that immediately stood out to them was once they entered everything, they had about half or 4 or 5 kind of levels that were very not profitable. They're actually losing money by making those sales, right? So that insight to be able to just cut that service, because by the way, it was actually the worst one and the hardest one for them to service anyways. So it's just a loss, right? That part should not be in their business, or at the very least, it should be baked into some other component. But they're able to realize that and see that through a lot of this work. And not only that, if they ever wanted to make changes or add to their pricing, add different services, add new vendors, that's now they have this entire matrix to be able to just come down in here, add into these little tables, more details and more pricing. That's going to automatically update into this table here. So they have kind of a master view of what does this cost us to service, right? So they can really, really have a lot more clarity than they did before, whereas again, just guessing, gut hunches, compared to now, it's extremely data-driven, extremely flexible, and they really have access to whatever else they want to do in terms of, how they want to play around with their pricing. So this was another cool example of a very custom kind of pricing table for this specific business. However, it's a problem that we see a lot of times. So it's another issue that we like to tackle oftentimes with our clients. Okay, so the fourth and final model that I want to walk through here is probably the most in-depth example where this business was a manufacturing business and they really want to see a forecast of not only their sales, but also their cash projections, and be able to adjust the forecast based off of what their production schedule says. So it required quite a bit of data in terms of collecting from them, understanding what their schedule was, which you're going to see kind of in these black tabs here. They send this over to us. We do kind of our data massaging and manipulating to ultimately be able to view this on a kind of full year basis. So a lot of numbers and a lot of tables here. Without going too far in depth into it though, this model allows the entire business and the entire company to view all different parts of their business for each product that they manufacture in terms of volume, the retail price, the discounts that they're offering, the invoice price, all of that in conjunction with when they expect to collect their cash, right? So they have the dates, the amounts, the categories that they're going to be building for. And this flows into two pieces. One is the volume inputs that we see here that shows you by each month for each category, for each vendor, what are we projected to sell, as well as a summary table here that projects not only the business as a whole, but the two very distinct segments of their business, whether they're doing direct sales or dealer sales. All of that also gets to be viewed in segments as well. And then last but not least, the cash flow forecast that we build out for them that shows them for every single week of the year, what is their expected cash receipts, what is their expected cash disbursements, so we can know where do we have throughout the year, what points are we a little bit kind of too close to running out of cash, when do we need another injection, when do we need to pull back on sales, and if we ever do need an injection, how can we go about acquiring that? All of that kind of gets updated on a week by week basis here. So you can see red is when we're in danger, blue with black is when we're doing all right. And this gets customized to each individual business so that you have kind of a master data set that is really tied to a lot of the data that you have in your accounting system between your distributions, your payroll, your operational data, all of that gets rolled up into one. So it gives you kind of the tools that you need to make better decisions within your business that are backed by data. If you are searching for any type of fractional accounting or fractional CFO services, I highly encourage you to reach out, book a call with one of our members of our team. If you have an audit call already, then we're super excited to get on board with you, dive a little bit more deeper into the weeds of your business, and start, building out recommendations, tools, and models that you can then use to kind of take the next step in your business and ultimately have an entire finance team behind you, supporting you in this journey. So thank you very much for watching, and I look forward to the next one.